Hi, my name is Scott Gibson with Beneath the Surface. I'm here with John Kaiser of Kaiser Report, Kaiser Research. Thanks for being with us, John.
Good to be here.
Now, you have a very strong and powerful research engine, a database with the vast majority of the junior mining companies and mining companies in it with varying different search criteria. I've used it myself, I'm a subscriber, and it's very powerful. And going back to publications you've done in the past, you do bottom fish reports where you have, using various filter systems, come up with companies that you find that are very undervalued when the market is at a bottom. You don't have a current report out that's a bottom fish report right now. What are you doing right now, and how does that lead towards your next report?
Okay, at the end of last year, I closed out the two editions that I published at the start of 2009 and 2010. The first was up about 700%, and the other one was up about 300%. I have not produced a new edition yet because I think this market is still seeking a bottom, but I have started to assemble a short list of candidates that I will publish as a future edition of Bottom Fish.
So what are some of the criteria that you're using to evaluate these companies that may end up in a future bottom fish report?
Well, historically, I've looked for companies whose share structure is not hideously high, companies that have working capital, a reasonable amount, and that are cheap. Now, this is not so easy anymore because of the 1,400 TSX venture companies that we have in our system that are resource-focused. 80% are trading below 50 cents. They all have classic bottom fish type patterns, but the number of shares out is very high. And the problem is, after the 2008 crash, a lot of companies that got demolished, rather than do the traditional rollback, went and issued a lot of stock to get money to keep their projects going. Now we're at a stage where there is no ability to raise more money. It's become very difficult to get aftermarket for the stock, so we're heading into a major hideous rollback cycle. So what I'm looking for are companies where I can see some story where there is potential, and that makes it much trickier because you can look at all the structural considerations, but once you have eliminated the ones that are in the hole in terms of money and are way too much stock out, then finding out if there is a story that even if they do a rollback, can drive the stock back into a new speculation cycle. That is the difficult part, and the beauty of my search engine is it allows you to do that other part, discarding all the rejects much more efficiently than was possible in the past.
And what are some of the things you look at in terms of that criteria? I know when I was using the database, you have a huge list of criteria and multiple search variables to try and go through those companies and see what comes out, what's the major things you look at.
Well, there's two groups that I'm looking at right now. One is the companies that have a resource estimate in place, and so I'm looking for these companies that with more advanced projects. I think the market right now is very negatively biased towards seeing lower metal prices in both precious and base metals down the road, so they are putting very punitive valuations on ounces and pounds in the ground. So I'm looking for companies that have this sort of asset that if we do get a turnaround and inflection in the market's perception of where metal prices are going, these things could be fantastic bottom fish, rising from say 10, 20, 30 cents, getting back to $1, $2 in the next cycle. So that's one group. The other one is exploration companies. I think we are heading back into an exploration-driven cycle where people bet on discoveries. We haven't had that since the Bre-X blow-up in 1997, but the better stuff, the advanced projects, are going to disappear over the next 12 to 18 months through M&A once we see that the prices are not going way down. And then there's going to be no product available. People will be much more comfortable with, say, $1,500 to $2,000 gold than they are now, and say $2 to $4 copper, and so. And then the game will become one of exploration plays. So teams of people who are in place, they own a meaningful amount of shares. It doesn't matter that there's an awful lot of shares out, and some sort of property portfolio where I can see that there are targets that can be drilled to perhaps create these 10, 20, 30 banger type of home runs from an exploration discovery.
Nice. And in terms of the resources, is there a sort of threshold of the companies that have a resource that you use in like a 1 million ounce gold or equivalent, or 500,000 ounces?
Well, one bottom fish area that I look at is I look for companies that actually have less than 1 million ounces, because typically these are projects where with additional exploration you may be able to get this over 1 million ounces, but because they don't have the 1 million plus ounces, the market doesn't like them at this particular time. So rather than looking for the ones with lots of ounces, I'm looking for ones that already have a base, and then I have to look at the geology, and that the search engine won't do for me. Right. So I have to see if an appetite for exploration resumes, could this 500,000 ounce deposit suddenly become a 2 million plus ounce deposit, especially when people become more comfortable with lower cutoff grades than they have in the past.
Mm-hmm. And cutoff grades have been typically falling for projects not only in production but for what they're exploring for. What's your threshold now? Your sort of rule of thumb, is it of a gram per ton or is it less than that now?
Well, it depends on the size of the deposit. So if you have millions of ounces, I've seen resource estimates, base case resource estimates done as low as 0.2 gram per ton cutoff. And that, of course, assumes that we're going to see $1,500 to $2,000 gold for a long time, and that we're not going to see massive cost escalation in the future. The location's very important if you're going to do a low cutoff. Obviously, in more difficult locations with infrastructure challenges and so on, you would need a higher cutoff. I'm more comfortable with something like a 0.4 gram per ton cutoff, but you have to, you can't be very hard-nosed about it. You have to be flexible and look at the total context of the play.
Yeah, I totally agree. And is there any particular companies right now that you're keeping your eye on that you feel comfortable mentioning, or ones that you've covered or have been in some previous issues where you really think they have a lot of potential going forward?
Well, there's a couple which one of my subscribers exclaimed, one would never find these using traditional bottom fish type criteria in your search engine. One is Eurovan Resources, which has come up with a new technique for prioritizing geophysical anomalies in the Athabasca Basin that are supposed to be these unconformity style, very high grade uranium deposits. And they're doing something with lead isotopes in vegetation. They do tree cores and so on, and they find areas that have an anomaly with the special isotope that's a decay product from uranium. Mm-hmm. So now they're going through the basin and looking at different prospects that are being dropped and all that, and coming up with targets that actually aren't just going to be some graphite zone down deep, but actually will be a radioactive area with a big deposit in it. And the other one is Nevada Exploration Inc., whose gold and groundwater system that it uses in the Nevada Basin gravels to find sort of haystacks, anomalies where there's gold being leached from the some gold in the bedrock that may be hundreds and hundreds of meters deep beneath the gravels. And this has caught Rob McEwen's attention, and his McEwen Mining is using this on his huge South Cortez land package to look in those areas where traditional geology has a hard time justifying a blind drilling hole. And they've also done a deal with them in a new area that they're in the process of staking now, which apparently has the biggest haystack that Wade Hodges of Nevada Exploration has found in his in this map of Nevada that he's created that nobody else has. So here's a little. Both of these are trading in the 10-15 cent range. One has about 50 million shares out, the Eurovan, and the NGE has about 120 million shares out, and neither of them have a huge amount of money, so it would probably fail the traditional bottom fishing screen. So this would be one where it's like, what are these people about, and do they have a special hook or so? And that's what I've done with this sort of short list of about 130 companies that I've done. A lot of them are companies that I know are good, have decent management. The share structure is not hideous. There is positive money in the financials. And I'm saying, do you guys have a story that's special and unique? Because we're not going to be in a full-fledged exploration market in the next 12 months. It's going to first gravitate towards stories that have an intriguing angle to them, or perhaps better than normal chance of delivering a home run.
That makes sense. And in those two companies, in full disclosure, I don't own either of those two companies. Do you own either of those companies?
I own only the Nevada Exploration Inc., and the Eurovan is on my accumulate list.
Thanks very much, John.
Thanks, Scott.
Again, that's John Kaiser from the Kaiser Research. My name is Scott Gibson from Beneath the Surface. Thanks for being with us.